Hey guys, welcome back. In today's video, we're going to take a look at a couple of live trades that I executed this week. Now, one of them was on Facebook that just did not get the follow through that I was looking for. So we'll take a look at the technical chart. I'll show you what I was looking at, and then we're going to take a look at the live trading video. You're going to see how the trade starts to work initially, but then quickly turns around and goes against me. You're going to see how I used price action to really tell me that the trade was no longer valid, and that even though my technical stop wasn't hit, I decided to go ahead and get out of the trade, and you're going to see how I was able to essentially manage that position and walk away with a small profit, but really just a flat trade because there was so much more profit potential in the trade that I was looking for, and price action just told me that it wasn't going to happen. So I was able to save myself a lot of headache and a lot of money. We'll also take a look at a couple other trades that I executed today, which is Friday, May 21st. Just a small loser on Tesla, and once again another trade that just didn't get the follow through that I was looking for on Apple. So you're going to see how I was able to manage that trade and walk away with profit, but much smaller profit than what I was really looking for. So if you guys are new here, I'm Tex, and I share my journey with trading and investing in the stock market. As always, guys, I really do appreciate you watching. Let's go ahead and roll the intro and get started with the video. All right, guys, so diving right in here. Now, the first thing that I want to point out is I'm looking at the daily chart here for Facebook. This is going to be the first trade that we look at. And this was on May 18th. So this was this week on May 18th that I took the trade. So you can't see the day yet. This is what it looked like, obviously coming into the morning. And what I was looking at here on this particular chart is the fact that we had this pullback off of the all-time high, and we rounded back up, and we were coming back into this kind of 316 level. I had 315.88 marked, which was this prior swing high from right here. So I had that marked as a key trigger point for the stock and was looking to see if we could get some kind of a move inside of this pocket here, maybe work our way back up to all-time high. Now, obviously, I wasn't looking for that big of a move on this particular trade, but I was simply looking for a breakout trade over that key 316 level off of the open with some momentum, and see if we couldn't catch a nice trade up into the 320 area, maybe even a little bit higher than that. 324 comes across right in this area. So something like that was working inside of this pocket here, looking for that breakout trade. So that's going to be the first trade that we take a look at here. Let's hop over to our video player, and I'm going to hit play. So we're looking at Facebook here. The market is open. And one thing that I'll point out is that it's basically opening right at yesterday's close. Yesterday's close is right here. So it's opening right inside of yesterday's range. We're starting to see this first 1 minute candle is coming down, which is good. This is what we want to see. We want to see that first move is down. We want to see it catch a bid and then round back up, and then look for that opening range breakout. If it's going to do it very quickly, basically looking for that 2 minute opening range break. So big pull here, right? Big pull here. And again, the key technical level we were looking at was 315.88. We can call it 316. It's literally just over high of day right here. So it looks really great. If we find a bid here and we round back up and we make the break over 315.80 area, 316, it should look good for a push higher and a move into that pocket. So as we do find a bid here, leaving behind this long lower wick, boom, look at that push up right over high of day. I'm immediately in. I'm buying here. You can see I'm up to 16 contracts with an average price of $4.53. I apologize. The left side of the screen here got cut off in this recording, but I do fix it for the next one. So as we get this break over high of day here, you can see I'm very quickly up, like 480 bucks. Let me just rewind that really quickly for you. Look right here, I'm up just almost immediately on that huge push up, right? Those premiums on those contracts just expand so quickly. I'm up 480 right there, and it looks good, right? We're making this push up. I'm trying to sell some here. I'm trying to sell 3 contracts at 485 just to lock in some profit, reduce some risk, just the typical way that I like to trade. I like to start scaling out as I get the move in my favor. Again, I kind of see that it's stalling here. It's having a little bit of trouble. We're over that 316 level. That's good. That's what I want to see. It makes sense that obviously some people are taking profit here. Unfortunately, I was a little bit slow to hit the button, so I'm not getting filled. I'm trying to take a little bit more off. So I've got 6 contracts sitting there at 485, not getting filled. All right. So now what I see is that we leave behind this long upper wick, right? So this is kind of one of those price action subtleties that can really give you some nuance clues as to what it's telling you. And this is telling me that technical sellers obviously stepped in here just over that 316 level. This was the breakout level we were looking for, and we're back below it. And just like that, I'm down almost almost down $400 or $500 right here as we start to fall back down. So obviously my technical stop on this has to be low of day, right? So if we come back down and break low of day, I know I got to get out of this trade. And I'm probably going to eat a $600 or $700 loss at least if I have to stop out all the way down there. That is the nature of the beast, right? So at this point, the trade could still work. I don't like the fact that we left behind this big upper wick up here. I don't like that. If this was going to go, if this was really strong and this breakout was really legitimate and buyers were really stepping in here, it really should not have stuffed and come all the way back down here. So already I'm kind of getting defensive on this trade because of what price action has done here, what price action is telling me here. Basically I'm watching this closely. Right now there's nothing that I can do other than just be ready to stop out. If it breaks low of day, that has to be my stop. If I see it start to push back up here to high of day and it does not break high of day, I know that I probably need to go ahead and start getting out of this trade. Regardless of what the profit is on the trade, it just at that point is a trade that is no longer behaving the way that I would expect it to. It's not doing what I expected. So as we start to push up here again, just trying to be patient, just watching this price action. Let's see if we can get another push up towards high of day. I'm going to see if I can sell some up there just to really remove some risk, take some profit that I didn't get filled on that first push up, and then give it a chance, right? It could still work. It could still break high of day. If it does break high of day, it should see continuation, right? So now I see how much trouble we're having just getting back up to the 316 level. So I'm trying to sell some contracts here. I'm trying to sell 5 contracts at $4.60. And I get filled on those on this push up here. All right. So now I'm down to 11 contracts. I've only got 11 contracts. Originally had 16. I really want to try to let these 11 contracts ride and see if we can get that high of day break here. Here's what I'm looking for is we push up here. Can we get that high of day break? It's trying, it's pushing, and it looks like we just hit kind of a double top right there, actually. And right now I'm thinking, all right, okay, looks good. I really want to give this a chance. I'm still not selling anything yet, even though, we're in the green. I'm still not selling anything. And then boom, what happens again here? 1 candle, 2 candles, technical sellers clearly stepping in here. I don't like the fact that we left behind those 2 long upper wicks. So once again, it just is clearly having trouble here. So now I'm trying to scale out of some more of my position. Again, really just to start reducing the risk. At this point, the trade is telling me that it's having so much trouble going. It's not doing what I expected. So the safer thing to do is to just start scaling back some of the risk on the trade. Because really, like I said, if this breakout had the legs that I was looking for, it should not be struggling this much here as we broke over the 316. If there were really buyers interested in this breakout, they should have stepped in there, and they didn't. Furthermore, you can see that the volume here, it's tapering down. That's not what you want to see on a breakout like this. You want to see the volume actually tapering up, right? The volume is doing the opposite of what you want to see. So all of these things are kind of coming together to tell me that you probably need to be getting out of this trade. So you can see I'm trying to sell some more of my contracts here at $4.55, which, is just barely above what my cost average is here. Again, just more or less reducing risk on the trade. So I'm down to 6 contracts now. Again, trying to get rid of 5 more contracts. I've only, have 6 here. So that'll just leave me with 1 running contract. And I'm not getting filled here at 470. I think I'm going to have to take that down. Yeah, take that down. I'm going to try to get rid of these here at a lower price at 455. They're getting a partial fill. Again, you can just see how much trouble it's happening here. Look at this. You can see the lower high, lower high, lower high, right? This is all telling me that it's clearly having trouble here. Sellers are clearly driving it down. They're not letting the 316 breakout happen here. So I know I need to be getting out of this trade. And just like that, I'm out of the trade. So, walking away with $65 profit, but it's really a flat trade because I was looking for so much more. This particular trade with that many contracts, if we had gotten that break of high day here, that could have easily been $1,000 winner. So it's, it's a little unfortunate, but it just goes to show that whenever price action is telling you something, whenever you can clearly see that the stock is struggling and it's not behaving the way that you expected, it's not doing what you were looking for, you might as well just get out of the trade. Of course, you can hold to your technical stop. My technical stop is being the low of day there. You could hold, but I know that if I hold down to there, I'm going to be locking in a $700, maybe even an $800 loss, depending on how bad it falls. And if the price action is telling me that the trade really isn't valid anymore, I might as well just get out of the trade. I can always get back in, right? I can always get back in, but obviously it's not ready, so it's better to just get out. So that was Facebook, a good example of when a trade just doesn't work, and kind of using price action to tell you that maybe you shouldn't be in the trade anymore, was able to manage the trade and walk away with a small profit rather than a big loss, right? So let me go ahead and pull up, let's go to our charts here, and let's take a look at today. All right, so for today's trades, I took one on Tesla, and what I was looking at on Tesla is we have this level here at 596, really kind of that 600 whole number. Was looking to see if we could get some kind of a bid and start moving inside of this pocket here. You can see we do have some distance between the current price action and our 20 SMA here on the daily chart. When we look at the more macro picture here, this major macro trend line here is what we've been trying to hold all of this week. And I was thinking that if we could find a bid off of that macro trend line as we have, start seeing a push up over 600, maybe we get some nice short squeeze happening and maybe get a run back up towards that 20 SMA area. So it's kind of looking for that break over 600, but I wanted to see if we got that first move down in the morning, which I love to see. Maybe we could get an opening range scalp out of it and then add in on some type of an opening range break. So let me just load up the video here. All right, so here we go. So here's the open. You can see that Tesla is opening. First move is down. That's great. Tesla is opening just right at that technical level I had marked, which was 596.25. So you can see Tesla's opening right at that technical level, which is very nice. I like that, and I like that this first move is down. We do have a pretty decent gap here, so if we get to a complete gap fill here to yesterday's close, that could be a pretty high probability trade to look at, scalping something off of that, look for a retrace into the VWAP, and then maybe see if we could get all the way back up to high of day and go for an opening range break. So again, the high of day so far, that's really the key technical level that I'm looking for a breakout over that. So I do love that the first move is down. I've got the 600 calls loaded up here. But as we start to fall lower, I start changing this to lower calls because of lower strikes, because today is a Friday. So I'm trading the current day's expiration contracts, and they are very, very sensitive on the day of expiration. So you do want to go pretty much at the money, if not in the money, if you can, when you're trading on the day of expiration. It's just going to be a lot safer than when you go out of the money. So we get this first move down, and again, I'm trying to keep the candles on the frame here on Lightspeed's chart, but we get this first move down into our first resistance level. We're looking to act as support here from the pivot point study. Obviously we get this first 1 minute hammer candle, but it's not enough yet because I see that there's a large gap here. I'm thinking that if we get this wash into the 9 EMA here, see if we couldn't start a position here and then bounce back up, get a small scalp out of it. If we come back up and break high of day, get back in for an opening range break. So that's really the game plan right off of the open here that I'm looking for. So far, Tesla's doing what I want. Obviously, if we don't get to this 9 EMA and we round back up, I'm prepared to do the opening range break right there. That's why I have the 600 calls loaded. But let's go ahead and fast forward. And all right, so here we go. So we're getting into the 9 EMA on this pullback here. Looks good. I've got the 595 calls opened, and I think I'm fixing to switch to the 590 calls, because we are right at 590. Yeah, switch to the 590 calls. We are trading right at 590 as we tag that 9 EMA. So I'm watching this price action here. I want to see if this last 1 minute candle here holds, and then we start to round back up. That's where I want to go ahead and start getting in for some type of an opening range scalp. See if we can't ride it back up into the VWAP area here, take some profit, and then see if we get back up to high of day and go for the opening range breakout. All right, so that's the game plan. We're seeing this pullback here. Let's let this candle form. Again, being very patient as this candle finishes developing here, obviously catching support on that 9 EMA. And I like how I see the buyer stepping in there. We see this first move down here, and I'm starting in right now. You can see I got filled at $6.60 on just one contract, just very small size. And I'm just going to really look for this small little scalp right here, see if I can't catch about a point on that. And I'm going to go ahead and throw an order out. I think at 765, which is just a little over a point above my entry there, and see if we can get that filled. So we're getting the push up. That looks good. Premiums are coming up to 740s right there on the ask, 750. So I'm looking here. I'm going to try to throw an order out here at 765, and I hit the sell button. So there's my order to sell at 765. If we keep getting this push up, just one more tick up here into the VWAP, that should get filled. But unfortunately, you're going to see that it actually doesn't get filled, and the sellers drive it back down. Obviously, my stop has to be low of day here because I know that if it breaks low of day, it's at least going to fill this full gap. So there's no reason to continue holding it. You know, I can always reset and look at maybe getting back in on the gap fill, or maybe the pivot point down here at 582. So we did get the push up, but we didn't get all the way up into the VWAP. The order didn't get filled, so I take the order down. I realize that I'm probably about to have to stop out on this. So as we start to come down, and I'm watching here closely as we start to come back down to low of day, you know, I'm watching the premiums here. Again, it is Friday, day of expiration, so they're really super sensitive. So if you hesitate too much, you can really give back a lot on this move lower here. So as we start to move down to low of day, I'm starting to try to anticipate this a little bit. So I'm trying to sell at 640, just trying to salvage what I can. I'm not getting filled. We break low of day, I'm out at 590. So unfortunately, you know, $70 loss there as we did break low of day. Technically, you know, I should have probably waited until it confirmed right below the low of day here, meaning this next candle, because you can see that if I had done that, I probably would have got filled there at 640. You can see the orders coming through right there around 640. So I probably would have got that filled and maybe only took about a $20 or $30 loss, but that's okay. I mean, you know, the trade obviously was not doing what I expected, so I just got out of the trade for a very small loss. And now we're going to jump over to the last trade that I took, which was Apple. All right, so here's the Apple trade. This is basically like a contrarian scalp trade. Obviously, you can see that Apple is having this pretty big sell-off here. It is getting quite extended. It opened way up here. Here's your VWAP, so it's a long ways away. You had this first leg down, it kind of bear flagged. Now you're having the second leg down, and you can't see it. It's out of the frame, but the pivot point is really the technical level that I'm playing off of. That's the level I'm risking off of. I'm looking at it on my e-signal charts, but you can't see it yet on the Lightspeed charts. You will in just a bit. But as we're starting to come down here, I like to start scaling into my position. Because I'm taking advantage of this volatility as it's coming down and those premiums really just getting crushed. So you can see that my first two fills here for 10 contracts is right about $1.26, $1.29. And as we're washing down lower here, I'm actually getting filled here at $1.18. So nice little drop in the premiums there for another 5 contracts. Again, getting filled here at $1.12 for another 5 contracts. So we're up to 20. And again, as we continue to wash lower here, I'm watching the premiums over here continuing to dip. And you'll see that sometimes I will use this bid button here to buy on the bid, because when you get these volatile washes lower, I find that you actually get pretty good fills if you just go to the bid price instead of grabbing it off of the ask. But again, the key is that you have this volatility that is washing the price lower, and you're more likely to get filled on those really low bid prices versus just grabbing it off of the ask. So that was 2 orders there that I was able to fill off of the bid at $1.12 and $1.13, which is considerably lower than my first 2 fills here at $1.26 and $1.29. Again, we are trading Friday, day of expiration contracts. So I'm fully aware of how sensitive these contracts are going to be to price movements like this. So the premiums will really melt on you very, very quickly. Obviously, you can see that dropping from almost $1.30 down to $1.12 here on my last best entry. And we're going to see another wash lower here where the premiums actually drop below $1. So here we go, and you're just starting to see the pivot point come into the frame right there. So that's the technical level that I'm looking to risk off of. And as we start to wash down through that, you can see right here I'm trying to get filled for another 5 contracts at 98 cents. I'm not quite filled on that yet, but we should get, there we go. We got filled on those as we got this this wash down underneath the pivot point. So again, this is my technical risk level here. And we know that these stocks aren't going to stop right on these levels to a T. So we have to give them some wiggle room around those levels. And we're also playing off of the odds that we have this, this big extension down. We know that the probability of having some kind of a retracement is very high. So it gives us the ability to kind of scale into these positions. Now, obviously, we've established a low of day here just underneath of my risk level. So if we continue lower, I know I need to get out of the trade, and it's just going to be a losing trade at that point. But we are starting to bounce off of that technical level, just what I want to see, which is great. I'm up to 35 contracts here with an average price of $1.15. So I know that if we can get some kind of a retracement here, maybe not even all the way to the VWAP, because the VWAP's way up here, but if we can get some kind of a retracement back up through at least our 9 EMA, we should be able to get some pretty decent premium increases here to be able to lock in, probably around $500, $600 or something like that. With just a very small move in the premiums. Let's see, I'm in with, if we do some math here, I'm in with an average price of $1.15. And you can see I'm trying to sell 30 of my 35 contracts. So if I could get these 30 contracts filled at $1.30, that would lock in $450, and then that would leave me with 5 contracts running. And then we'd see if we could get a little bit more out of the trade with just 5 contracts. So basically looking to scalp just the majority of the position out on a very small move, because we are trading against the trend, and then leaving a few contracts on to run to see if we can get a bigger retracement back up into the VWAP area or something like that. So as you can see, we did not get filled, and we're already back up to the 9 EMA, rejecting and coming back lower. So this is kind of one of those situations where it can be a little frustrating whenever it's just not finding a bid. And especially when you're trading the day of expiration, you can see how quickly the contracts really just came right back down. The premiums just did not really bounce up very much and came right back down. And now we're down $400 or $500 here on 35 contracts as we start to look like we want to head back to low of day. So we're flirting with the pivot point. You can clearly see the line right there. That was our technical level. We have our low of day. That's where we know we need to be stopping out. If price starts confirming below that, we just need to eat the loss. It's one of those rare times whenever it just doesn't work. Remember, not every trade works, but playing the probabilities, the probability that it has some type of a retracement here is obviously very high. And so you play those probabilities and you risk off those technical levels, and that's really all you can do, right? So far it's still holding, but this bounce is a lot weaker than I would really expect, than I would really like to see on a trade like this, especially again when you're trading the day of expiration. So it's always something you want to be aware of. So as we watch this here, we're just going to see how this plays out. You can see that I've took my order down because I just was not getting filled, and we're already starting to head back down towards low of day here. But overall, the trade still has a chance to work. We're going to give it a chance here, see if it wants to hold. So I'm just going to fast forward a little bit here just to save some time on the video. So you can see this candle, we wicked down right into low of day. We technically broke it a little bit, but so far holding. We have not confirmed below low of day. So you don't want to be rushing to stop out just because it just tagged low of day. You need to give it a chance to work here, right? If it's going to break low of day, it'll let you know. It's going to confirm below low of day, and you'll know to get out of the trade. So as of right now, because it is Friday, you can see how badly the premiums are really losing value here. kind of hovering right around that $400 range. But right just like that, we tagged low of day, and then boom, big bounce up here. Premium started recovering nicely. Again, still struggling here, but just flirting with our break-even area here. And we're getting this push up. I think I'm about to throw an order out here at $1.25. You can see I've got my price set at $1.25 here. And I'm just going to see if I can get these 30 contracts out at a lower price than I originally wanted. I wanted to get them out at $1.30. Didn't get that fill. Now I'm going to try for $1.25, and you're going to see how frustrating this is whenever it just is so heavy. It just doesn't want to bounce. I mean, right now it looks good. It looks like it should get some type of a retracement here, and we should easily be able to get out at $1.25. To me, $1.25 seems such a very realistic premium to hit. We're already at $1.13 here on this push up. Again, just really struggling. So let me just fast forward once again. Okay, so as we're starting to break up over the 9 EMA here, you can see premiums coming up to $1.20 right there. So $1.20 on the ask, seeing $1.19, $1.20 coming through on the time and sales. So right there, I'm on the ask at $1.25, trying to sell 30 contracts. And we got this push up. We're pulling back. So far, this looks good. I would expect to see this 9 EMA hold here, get one more push up higher here, and we should get that filled at $1.25. There's the ask, $1.25. On the ask, $1.25. There's my order, literally sitting there at $1.25, not getting filled, still not getting filled. Now the ask is dipping below $1.25 as we struggle a little bit here. I'm looking at this thinking, okay, this should fill. Just be patient. Give it a chance. Yet again, pulling back here, still having a little bit of trouble. Let's let this 1 minute candle form. And as it tries to continue to hold this 9 EMA, it's really struggling. As you can see, the price action is really telling me here that it is just struggling. There's just not a lot of buying interest. And as a result, the premiums really aren't coming up in value. There needs to be some clear buying interest to see those premiums really spike back up. And it's just not happening, right? So we actually broke down below the 9 EMA. So right now I'm thinking, all right, if this comes down and puts in a higher low here, I still like it. But if it comes all the way back down to low of day, I know right away that it's going to break low of day and I need to be out of this trade. So I'm still sitting on the ask at $1.25, still waiting to see if I can get filled, right? So we come down, looks like maybe we're forming a higher low here. So I'm thinking, okay, this looks good. I'll leave my order at $1.25 since it's having so much trouble. I'm on the ask, $1.25. I'm literally sitting there and I'm thinking just one tick higher will get filled. Just one tick higher is all I need. Just one tick, guys. I'm within a penny here of getting filled, but I've got 30 contracts I'm trying to unload. So it's not exactly a tiny position or anything. Again, not getting filled. On the ask, $1.25. Still not getting filled. So I start seeing this and I'm thinking, all right, maybe I need to just drop it to like $1.23. Because obviously $1.25, $1.20, $1.25, those are going to be popular numbers to put orders out at. And so I'm thinking, all right, if I just drop it a couple of cents below that to $1.23, maybe that will fill. And by the time I do that, it's too late. So you can see that obviously the sellers are just not having any of it here, right? They're just not having it. So I'm still sitting at $1.25. I have my order box here ready to go to $1.23. I think I'm fixing to cancel this order at $1.25. I'm giving it one more chance. Look, I'm sitting here on the ask. Again, here we are, $1.25. Not getting filled. So right there, I realized, okay, let's just drop it to $1.23. And you can see there's some orders here coming through at $1.23. Looks like $1.21. There was a lot of contracts came through right there. So probably if I had went to $1.21, I would have gotten filled. Unfortunately, I did not get filled, so now I'm coming to $1.20. Now I know that I just need to be getting out of this trade because it's just having so much trouble here. If it fails and comes back down, it's going to go red like that. It's going to go red so quickly. So at this point, I know I need to be cutting my risk on this trade. And I sold 30 of the 35 contracts at $1.20. And that's just really unfortunate, locking in only $120. And really, again, it's not about the P&L. It's about reducing the risk at this point because the trade is not performing as I had expected. And so there's really no reason to continue holding this, hoping that I do hit the price target that I'm looking for. If it's not behaving as you expected, you might as well just get out. You can always get back in on a secondary trade, but for me, it's better to just get out. And with that, I locked it out, $190. So, and again, you can see the premiums are right back up to $1.25 here. And let's see if I caught enough of this recording to see if, I think it falls back down here after this. And then it eventually does crawl back up, but very hesitantly, very slowly. So if I'd ended up holding, looking at it in hindsight, I probably would have gotten filled at $1.25. But clearly the price action is telling me it shouldn't be taking, if there were more buyers here, it shouldn't be taking this long to make this push up. So here we go, $1.25 again on the ask, and right there probably, yeah, so right here probably would have gotten filled on the $1.25. You can see 10 contracts there at $1.25, 2 at $1.26. So I don't know. I had 30 contracts. I don't know if I would have gotten filled on all 30 contracts at $1.25. And look at it getting stuffed here and coming back down. So let me just fast forward and look. There you go. Boom. Look at the premiums all the way back down to $1.10 on the ask. So let me just fast forward the video, see what this looks like so you guys can kind of see how this played out. And you can see obviously on the bounce up here, it just, look at the seller stepped in here and it's starting to curl back downwards. So it definitely doesn't look good. You can see how red I would be on the position if I was still holding it, if I was still trying to get filled at $1.25. And again, I'm not really sure I would have gotten filled at $1.25, at least not on all 30 contracts. So again, it comes back down, technically trying to hold a higher low here. We get the push up. And I think this is where we do finally get the retracement up. Yeah, there we go. So now we're looking at $1.27 coming through. So right here, I probably would have been getting filled. But I would have had to hold through this here. And obviously right here, I'm thinking this is just not looking good. It's not retracing as I had expected. Ideally, like I said, on these trades, we're looking for quick retracements. We're not looking for these type of, it retraces a little and then just chops for this extended period of time. Meanwhile, your premiums are just getting chewed up from, time decay, especially on the day of expiration. So it's a little bit tricky. It's one of those trades that, I could have gotten filled at $1.25, but not that easily. So that's it, guys. I mean, nothing too exciting, but I think, hopefully there was a lot that you could learn from this in terms of price action, because sometimes our technical levels don't get broken, but price action is dictating, is just kind of telling you that the trade is not behaving as you expected. And so sometimes it's better to just get out of the trade. Remember, you can always get back into a trade, but you can't really, if you hold too long, it's, especially with options, it can turn on you very badly, especially on the day of expiration. So you do kind of have to be thinking a step ahead with options. With stock, it's pretty straightforward. Obviously, the price you pay is the price you pay. You can literally use hard stops, and if it breaks the level, you get automatically stopped out. With options, the way they're priced and everything, it's a lot more difficult to use stops like that. So there is a lot more discretionary decisions in options trading that just kind of comes with experience. So hopefully these videos like this help you out in that regard. As always, guys, if you enjoyed the video, please hit the like button, leave me a comment, and I really appreciate you watching. Take care, and we'll see you in the next one.